Hello, Dental 18 listeners. This is Kiera, and today I just wanted to empower you with if you're in the boat of struggling to understand your P&L, struggling to understand how to truly master your dental finances, you're not alone. This is common. This is what I'm obsessed with helping dental practices truly understand. And today I want to break it down into 5 simple steps to give you clarity, control, to really be able to understand your dental practice finances. So today I just wanted to let you know that when you understand your P&L, which is a profit and loss statement, it helps you just be able to know which metrics to move, to understand how can I actually create better decisions, to feel more empowered with my numbers. And so I want you just to know that there's 5 simple steps that I've learned that I wanted to bring to you to really help you understand this, and to this year maybe embody the identity of I am a money master, or I am a finance master, or whatever it is where you really take control. Because at Dental 18, when we consult our practices, we have hundreds of offices and we work virtually, we work in person, we work one-on-one, we work group style. But I found that one of the biggest stressors for dentists is not understanding how does the money work? We understand the dental, we don't understand the team per se. Front office is I don't know, but it's really where is my money and how do I actually make my money work for me? And so understanding that, what does it mean to be profitable? We have overhead calculators, we have profitability scorecards for you that I really love helping our clients with. But really it's let me just break it down into the nuts and bolts. I am not a CPA. I will have that disclaimer out there. I just am going to break it down of how do I become a financial master? So today, let's break it down into step 1 is understand the structure of your P&L. So a P&L is broken down into basically our revenue, so our collections, and then our expenses from there. And then that breaks it down into profit. Now, something that always gets a little funny is debt services. And if we've got loans or student loans or practice loans, sometimes those are associated with our P&L. Other times they're not. And what we really care about as owners is cash, right? We want the cash flow. We want to understand where that's at. And so if you understand that it's broken down into this, where we've got money coming in. So those are our collections. We need to make sure our collections sit at 98%. So we produce, we collect money, those collections, and then we spend money of our expenses. So payroll, rent, utilities, supplies, all of that, paying you as a doctor as well. And then from there, we have what's called our profit. And then after that, we have our debt services. And then that's our cash flow. But also of cash flow, then there's taxes that come out of it. And I think when you understand that, instead of it being I don't have any money, we just understand that this is where it goes. And so if we're not tracking it, what happens is we're spending money, we're spending more than we need. I had an office and they weren't tracking their supply spend. And so what happened is they were spending about $30,000 a month in one location. They're spending about $5,000 a month in another location. There's a discrepancy, but they didn't even realize that they were having this discrepancy until we started looking at their P&L. So once you start to monitor it, then we can actually get our supplies into more of a 4% of total collection. So if we're collecting 100,000, 4% of that would be $4,000. That's what we're allowed to spend for that month on supplies. Well, now we have the budget. Now we can get it in alignment. We can actually track it and lean it down. Another office started looking at their P&L, started doing it. They were at an 85% overhead at the beginning of the year. By the end of the year, they were coming in at a 53% overhead. So to me, it's just a math equation. 1 + 1 = 2. How do we have money coming in, subtract the things we spend, we have profit left over from there. We have our debt services and our tax. That gives us our true cash at the end of it. So then number 2 is we got to focus on what are the ways that we actually bring production and collections to the practice. Okay, so we've got our P&L. We understand how that's broken down. I also want you to know there's a chart of accounts that you can change that up. But step number 2 is we got to focus on the revenue streams, or the production of how do we actually get money on the books to be able to collect that. Are we being profitable in that zone? So there's different ways that we do this. So hygiene, restorative, ortho, cosmetic, different ways that we do it. And some offices actually like to track this and break it down. And you can actually put this on your P&L. You can literally put down how much production has come from restorative, how much production comes from hygiene, how much production comes from ortho, and then you can break down the collections that we have from that as well. So this is something really awesome to see how much of my practice is hygiene, how much of my practice is on implants or all-on-fours, how much of my practice is ortho. I have a pediatric practice and they really love to track their ortho amount of it because they want to see how much of their practice is truly ortho. Do we need to spend more marketing money there or do we not? This really helps you be able to see what services should we continue, which ones are the highest revenue? Do we need to change our fees on it? Do we need to look at different ways to break this down? It's really, really, really fun. And so then I can look at what promos we put in the practice. Where do I put my blocks? What block scheduling do I need to have more of? What marketing do I need to spend to make sure we're getting the correct revenue or production streams of the correct patients? We're treatment planning it. We look at our treatment tracker to see, are we actually bringing this in? We can actually increase profitability without needing more patients if we follow this. So a quick action item on that is maybe talking to your CPA about breaking down your revenue by services of what's coming into the practice to see where most of your income is actually coming from in the practice. Super enlightening when you start to look at this. Step 3 is now going to be looking at what we're spending. Okay. And on the chart of accounts, if it's not broken down, you can ask your CPA to break it down. I've mentioned on prior podcasts that we were spending about $15,000 on hiring once upon a time, but I didn't even know that's how much I was spending. This last year, they had all of my marketing lumped into one. So I actually asked them to break it out. How much am I spending on the website? How much am I spending on events? How much am I spending on our ads that we're running? All these different little pieces, because I wanted to get more granular and understand where are the dollars going and what, if I spend $1, is it coming back to me and what is it? So things for you on looking at your expenses. We usually have payroll, we have rent, we have supplies, we have labs, other things. We have our marketing, CE, consulting. We're going to want to look at, maybe we have our associate doctors on there. But what are these different pieces? And payroll, oftentimes it's all the fringe benefits that go on to it as well. So making sure the additional pieces of like our 401ks and our health benefits. What does all that go in? Because that does go into payroll. What's our payroll tax on that employee? Gosh, that was a fun day when I learned like, what? So this also just helps you look at it. And then what we want to do is we want to look to see, are there ways that we can cut costs? So going back to that example of cutting supplies, well, this office was just ordering through one supplier. There's companies like Ordo or Synergy or different group buying areas where you can still go through your same preferred vendor, but we can just get it on a discount rate. So for example, kind of like using Costco, like I can go and buy my, I feel like Costco is ridiculous on their rotisserie chickens. Like they're $5, or I can go to Safeway and spend $9. I'm still getting a rotisserie chicken. It's just how much am I spending for it? Now I get that food's a little bit of a funny analogy because food is not equal across all stores. So let's use something a little bit easier. I could spend, I can have my car insurance like again, through Costco versus through someone else. We're just trying to get our reduced cost, still getting the same quality, but could we reduce those costs? Other times just giving a budget, me realizing that I'm spending 15 grand on hiring. Well, there's a great company called Viva HR. If you do Viva HR/dental A team, or just DM me or email us hello@thedentalateam.com. I literally spend $100 a month on unlimited ads. So I took a $15,000 spend down to a $1,200 spend. Right there, I freed up over 10 grand. I mean, we're talking more like 13 grand that I was able to then save and allocate somewhere else just by switching that one thing. I'm still doing the same thing. I'm still posting the same ads. I just use Viva HR rather than spending it on Indeed. But I never would have known that if I wouldn't have been tracking this. So this is where, can we look at it? So what I recommend, and we have it broken down into percentages on our overhead calculator that we've created for our clients, but you want to categorize your expenses and look for areas where we can cut unnecessary costs. And also, what's the percentage of our total collections that we're collecting that we can actually minimize and make sure that we're with the alignment of what's recommended. So for example, like I said, supplies are usually at 4%. Payroll is between 25 to 30%. So making it get all the way down, but also those percentages are just baselines. If you want more profitability, can we shave a half a percentage? Can we shave 1% and still maintain the quality of our practice? That's a question for you to answer, but great ways to analyze this. So that would be action item on this is, let's categorize your expenses, look to see where we can cut, look to see the percentages to make sure what is in there. Is it allocated correctly? Meaning, did they put actual supplies in supplies, or did I get labs in there as well? So that way my numbers are wrong. And what other ways can I change that? Okay, step 4 is now we want to calculate our ratios. So on that, we're going to want to figure out like, what is our profit margin? What's our payroll ratio? So like I was saying, of those percentages, this is now where we break it down. If I'm spending $10,000 on payroll out of 100,000, well, that's a great gig, and I probably don't have enough people on there, and I have space within because I'm only at 10%, and I could go up to 30%, again, depending upon what I want my profit margin to be. I target with all expenses paid for offices to be a 20 or 30% profit margin. So that means, because overhead and profit get a little funny, overhead means all of our expenses, I like you to hit around a 50%. So if I've collected 100 grand, I don't want you spending more than about 50,000. That leaves 50,000 here. We pay our doctors here. The goal is to leave about 20 to 30 grand if we're on this 100,000 collection practice of true profit. Now, of that profit, like I said, you can have debt services there and also taxes. And depending upon the tax bracket you're in, that can actually make a pretty big difference. If I'm collecting 20 grand, I'm really not collecting 20 grand because I owe taxes on that. So that's a big asterisk around cash flow of how to master this and how to look at this, but making sure we're at the correct percentages for it to then gauge where are we at. So figure out what our costs are, get them in the pieces, and then figure out the percentages of each one of them, making sure that we're actually at the correct ratio of what it should be. In Dental 18, we're high on payroll because the bulk of our company is team. I don't have a physical location. I don't have a place that goes. Our product is our consulting. So my payroll is much higher than 30%. I pay a lot in payroll, but that's my product. For you, you have a lot of product in your practice of the supplies that go into it. We don't really have a lot of supplies that go into ours. I have a lot of software that I spend on. So everyone's going to be a little bit different, but we do have categories for dentists that we recommend. Like I said, payroll 25 to 30%, supplies at 4%, labs are 9% combined together. Those are between 13 to 14%, especially if you're on an implant practice. Marketing, if you're growing, it can go all the way up to 5 to 7%. If you're lower, it should be a 2 to 3%, again, depending upon your goals and also depending upon where we want our profit margins to be. I really love my doctors to be paid at least at 30%. And there also can get into a little variable of, do we pay our doctors as associates if you're an owner or not? Kiera's opinion, and I know, like I said, I'm not a CPA. My opinion is I like to help practices exit out of the practice if they want to. Meaning, if you want to own your practice and not have it dependent upon you, that's what I like to grow for offices. So they have the option if they want to, or if any life circumstances happen, they're not handcuffed of, I don't have anything else I can do because I'm no longer practicing dentistry. To me, that's a very scary spot to be in. So what I do like to do is pay my dentist as an associate and as an owner, because that way, if I ever want to replace my doctor, I already have on my P&L paying them as an associate, not just as an owner or actually taking $0, which often happens because of distribution. Now, your CPA can help you advise on tax strategy because there are strategies of how much you quote unquote pay yourself. But the way we have it is we just break it down and you don't necessarily have to run it through payroll. We're just making sure that our P&L matches so we know how much profit we'd have if any life circumstances happen to you. All right. And now step 5 for you. Step 5 is we want to set financial goals and track our progress. So like I said, where are you wanting to be on your profit margin? Do you want to be, where are we at baseline today? And then where do you want to get to? And then we look at the pieces for it. Just like on a family budget, if we say we want to save for a car or we want to save for Disneyland or we want to go on a trip to the Bahamas, well, now we start to save and we start looking at our expenses of, well, what could we eliminate? Maybe we don't need Netflix anymore. Maybe we don't need a DoorDash. Maybe we don't need internet. Maybe we need to add an extra job to it to be able to pay for this. But it's the same thing in a practice. If we want to have profitability or we want to have long-term financial success or we want to be set up for financial freedom, what do I need my business to profit to then be able to go after it? And how do I look at this? So then we look for how can I increase my production of higher revenue generating pieces that we enjoy doing? Maybe all on X, maybe ortho, maybe same day crowns, whatever it is for you. How can we add more of that to our schedule? How can we decrease the expenses or be smarter instead of just paying straight through a supplier? Could we work with a bigger supply company, like I mentioned, kind of like Costco, and get a discounted rate for that? Could I do that and save money on things I'm already buying? And then we're going to want to make sure we get those profit target margins, the percentages based on the industry benchmarks, like I mentioned to you, to really be able to grow for this. And so it's really fun. If we look at those little items, it just becomes a shave of a 0.5% here, a 1% there, a couple dollars here, increasing our production, using better block scheduling that really makes this where we then are tracking our progress. And it's really fun when you can get an office manager and a leadership team bought into this with you as well, which is why we share it on the podcast, because when they're all tracking and they're all aligned and we know what our profit margins need to be, it becomes much easier. And so there was a practice, like I said, we track with them quarterly, we're watching it, and they went from that 85% overhead all the way down to 53%. Well, let me just do some simple math for you. Pretend that practice was only let's say that they collected $1 million that year. Okay. So they did $1 million and that they were at an 85% overhead. That would mean that on $1 million, and let's say $1 million was true profit. Like, so we got $1 million, we got 85% overhead. That practice was collecting, or like take home, not including tax and all the other things, 150,000 out of $1 million. Now I understand. Now, if they're able to go, that was an 85% overhead. If they go, so still $1 million practice, down to 53% overhead, what that does is that actually moves them into 530,000 is now their costs, right? Did you follow my math on that? 530,000. And if they, and from there, so that means they're taking home 470,000. That just simple shift, they didn't increase their production. They just reduced their expenses. Again, $1 million practice, 150 to 470. That's a really big swing. You don't have to do anything more. We just have to be smarter with our dollars. So when you look at that and you think about that, that's where numbers get really fun for me. And that's where I love to empower doctors, leadership teams to how can we actually achieve this? So my goal for you would be, let's set a financial goal for the next quarter based on your P&L review. Do we want to cut down our supplies? Do we want to increase our production? Do we want to add our block schedules? What do we want to do in there? Because this then will literally help you exponentially grow to your financial freedom. So as a quick recap of these 5 simple steps are: 1, understand the structure of your P&L. 2, focus on the revenue or production streams that we can add in. 3, analyze our expenses. 4, calculate the ratio. So again, the percentages of them and get those into industry standards. And 5, set financial goals to track the progress and actually see where we want to be. It's such fun for me because this is how you actually are able to exponentially have your business work for you, you not working for your business. You don't have to do more work. You don't have to have more patient flow. None of those things. We just have to be smarter with how we're utilizing our money, how we're collections impact that, how we're spending our money, making sure we've got budgets in place for our team. Teams will follow suit. We just need to get this set up for them. So this is where it's really fun. And honestly, you understanding your P&L, it allows you to just make informed decisions, increase your profitability, aka take home pay, and grow your dental practice. And then the next step of this will be, how do we actually keep the money that we're making? That becomes so fun. So I'm happy to go through this. If you guys want, I can go through a P&L piece with you. hello@thedentalyteam.com, or go to our website and just book a call. We can do a practice assessment with you, totally free, complimentary on my side. Because this is really where I love to just truly empower doctors and owners to take the bull by the horns. You're already doing the dentistry. Let's have you now be compensated for that and do it in a fun way where you now feel like you are in financial control for yourself. So this is literally what the Dentally team does in consulting. If this is helpful for you, you want one-on-one help, or you want us to dive into your practice more in depth, like I said, we have that complimentary assessment for you. Click the link or come work with us. I'd love to have you, because this would really be a zone. You can DM us on social media, the Dentally team. So Dentally team is our hashtag, or you can email us hello@thedentalyteam.com. This is truly the zone, though. Become a financial master this year. You will be so happy that you did this. This is a gift you can give yourself. And as always, thanks for listening, and I'll catch you next time on the Dentally Team podcast.